How to comply with the new operational resilience policy from the Bank of England. The Bank of England has recently published its new operational resilience policy, which aims to ensure that the UK financial system can withstand and recover from disruptive events. The policy sets out the expectations for firms and financial market infrastructures, FMIs, to identify their important business services, map their dependencies, set impact tolerances, test their ability to remain within those tolerances, and improve their operational resilience over time. The policy also outlines the supervisory approach and tools that the Bank of England will use to assess and enhance the operational resilience of firms and FMIs. The new policy has come into effect from 31st March 2022, and firms and FMIs will have to comply with its requirements by 31st March 2025. To comply with the framework, firms and FMIs will need to take the following steps. Identify their important business services that, if disrupted, could cause harm to consumers or market integrity, threaten the viability of the firm or FMI, or cause instability in the financial system. Map the people, processes, technology, facilities, and information that support their important business services, as well as their external dependencies. Set impact tolerances for each important business service, which are the maximum level of disruption that they would tolerate in a severe but plausible scenario. Test their ability to remain within their impact tolerances through a range of severe but plausible disruption scenarios. Identify and implement improvements to their operational resilience, such as enhancing their contingency plans, reducing their vulnerabilities, or increasing their capacity or substitutability. Report to the Bank of England on their compliance with the policy, including any breaches of their impact tolerances, any material incidents or near misses, and any significant changes to their important business services or dependencies. Visit us at